Overall, positive sentiment remains in global markets, but a deadly missile attack in Poland has brought back nerves around the impact of geopolitical tensions. However, the rand, along with its emerging market currency peers, they're still holding steady to recent gains. Independent markets analyst Jimmy Moyaha joins us now for the latest in markets development. Thank you very much for your time, Jimmy. Always good to have you. Let's start with these positive sessions that have been the thread in the market activity so far this week. What are the latest developments at this early stage?
Good morning, Chloe. Morning to our viewers. Markets at the moment are holding steady. We did see some bullish price movement from last week off the back of some rather positive U.S. news. We've since seen that the rand has continued to strengthen and maintain its ground against the U.S. dollar. We're seeing that against the euro, though it is trading a bit weaker. It's back near the 18 rand level against the euro, sitting at about 20 rand and 50 cents against the pound as well. So not doing the best there, but very, very strong against the dollar relative to what we've seen in recent times. We've seen it above 18 rand, possibly even touching 18.40 in recent times, but now it's sitting at about 17 rand 30 and holding steady there. We've got gold sitting at about $1,775 an ounce, which is showing some good signs of strength for the gold price. We've seen it struggle to come back above the $1,700 an ounce level. We've seen it sort of hold below the 1,650 level for quite some time. But off the back of the inflationary news, of course, that we saw last week and the continued positive sentiment coming out of China, we've seen that markets overall are showing a bit of life. The top 40 as well, almost about 1% for the trading session this morning. So interesting to see that markets are starting to show some signs of positivity as we head towards the close of the year.
Let's go back to that geopolitical tension I mentioned at the start, and this is a matter which remains a concern with the deadly missile attack in Poland. How is that affecting activity, if at all?
Well, in early morning trade, there was a bit of concern around that report from Poland. The Polish government had said that the missile was a Russian missile. President Biden has since come out to say, of course, they're meeting at the G20 summit in Bali. President Biden has come out to say that the reports that he's got on his side don't indicate that it was a Russian attack. The Kremlin has come out to say that it was not an attack from their perspective, and it looks as though they don't appreciate that this seems to be a deliberate provocation to escalate the situation and escalate tensions. So for the moment, both Russia and the United States are saying that this was not a Russian attack on Poland. We have not yet confirmed what it is that caused the missile to land where it landed and then the damage that's been done there. But by all accounts, it does not look like this was instigated or initiated by Russia.
Yeah. Let's then bring things locally. Stats SA will be releasing the latest retail trade sales numbers. What's expected there, Jimmy, given the previous month's rise? You add to that the impact of load shedding and the near-term outlook as we approach the festive season.
Yeah, well, I mean, the forecast at the moment is that we'll get about a 1% increase in retail sales, which isn't exactly ideal. But I mean, we do know that this is sort of leading up to our festive period. We'll probably get better numbers going into the December period as we report those after the fact. But looking at the current retail numbers, there's definitely been some strain from the load shedding side of things and the continuous load shedding. That's not only affected retail sales, it's affected manufacturing side of things as well, with companies like Ford also being affected in terms of their production, and other companies like Fushini that reported last week also reporting that load shedding hours are affecting them. So we can anticipate that the retail sales numbers are going to come in a little lower than previous months, and in line with that, we can expect that the ongoing causes and the ongoing reasons behind that are going to be things around load shedding and things around consumer sentiment being strained by the inflationary pressures and the interest rate pressures that we're seeing. So numbers are expected to come in a bit lower. We'll see if they're able to come in a little higher than the forecast of 1% for the month of November.
Well, let's talk company news now that you started that thread on company news. Ford saying that it's forced to truck export the vehicles to Durban, citing that its Pretoria plant is not fully operational and Transnet, on the other end, they can't say when it is that they'll be able to provide this service. What do you make of that?
Well, I mean, from Ford's perspective, I can imagine it's exceptionally frustrating. If I were in their situation, I'd be highly frustrated with this. If you remember, the Tshwane Automotive Special Economic Zone was formed in partnership with Ford and Transnet and other manufacturers in the region, and the whole point of that was to be able to export vehicles by rail down to port in Durban. And now Ford has said that if this continues, that by 2025 they'll probably have about 79 trucks on a daily basis transporting vehicles down to port for export, which is not a good thing. It's going to be a costly exercise, given that Ford has already committed well over about 15 billion rand in investment to this particular project, and about 27 billion rand over the last 10, 11 years. This is extremely disappointing. It doesn't inspire confidence at all for the manufacturing space and for foreign investment to come into South Africa when they're going to be constrained like this. Transnet really should be doing more, and Transnet has come out to say that they can't give a timeline on when things are going to be ready from their part. They don't know how long things are going to take, and they're effectively not really coming to the party, which is very disappointing given that manufacturers at this stage and the economy at this stage desperately needs Transnet to come on board, not only for guys like Ford, but if you look at the coal space and getting commodities out to port and getting commodities exported as well, the longer the Transnet concerns continue, the more it's going to hamper exports and the more it's going to have a damaging effect on our export numbers when we then need to report our trade balance numbers on a quarterly basis or on a periodic basis at that point. So from a business perspective, this is definitely not a good thing. It doesn't, I can't imagine it sit well with Ford, but also from an economics perspective, this is going to have a long-standing damaging effect on companies locally. Companies might start to then shift where they move their businesses to. They might not hire as many people, and that's going to have a far greater ripple effect. So Transnet really needs to get their ducks in a row. They really need to come to the party, and they really need to deliver on better services.
Well, let's conclude then, Jimmy, and conclude with yours and my favorite subject. Looks like we can't stop talking about Elon Musk and Twitter whenever we speak. The understanding is that he continues to trend as reports now emerge that he is punishing engineers who have called him out online.
Yeah, so Elon's having an interesting time having taken over Twitter. We know that this is not the first of these sorts of reports. We know that when he took over, the first thing he did was terminate the contracts of some high-ranking executives, including the CEO. There was also conversations previously around Elon saying that staff members need to return to work, so that working from home is no longer going to be a thing. Staff members need to be putting in at least 40 hours a week back in the office. And now this is the latest development in the string of Elon Musk-related interactions with Twitter. It's definitely not providing confidence and calm towards the Twitter employees. We know that when he did the mass retrenchments, or when there was a mass retrenchment at Twitter, one of their offices that had just been recently opened, I think it was their Ghana office, was opened around the 1st of November, and by the 3rd of November, everybody had been retrenched and there was no longer an office. So it's been a very, very up and down time, mostly down for Twitter, and it'll be interesting to see how Elon then navigates this going forward. I mean, there's been conversations. This conversation in particular around the employee was just along the lines of Twitter workers not being happy with Elon's approach to doing things and coming in at this point, and that looks to not have gone over well with Elon. I think at the moment, workers at Twitter are facing a lot of uncertainty, and they're not very comfortable in their spaces at the moment, and I think we'll need to see some changes from Elon and from the management team in terms of how they approach whatever situations they want to approach going forward, whether it's monetizing Twitter or just the overall management of the organization. So not a very good start for the company since it's gone into Elon's hands, but we hope it'll get better for the Twitter employees.
All right. Well, we'll have to wait and see how this goes. Jimmy Moyaha, let me thank you very much for your time. Independent markets analyst. Thanks indeed for that markets update.